So you want to trade prop. Well, trading prop is not like regular trading. It has a very specific set of rules that you need to master. But if you can conquer those rules, you could be minting money for life. I'm Boris Schlossberg. Let's get into it. So there are 3 things you really need in order to be able to succeed in prop trading. You need a trading plan, you need a good strategy, and you need a set of tools. Let's talk about tools first. As far as tools go, there are 3 things you need. 1, a very simple, very clear, very precise informational source. And I can't think of anything better than a website called Financial Juice, which gives you the calendar, the upcoming data, and the most recent up-to-date releases. You pretty much will know everything that's happening before you take a trade. 2, you need good access to charts. Almost everybody who trades uses TradingView because TradingView is incredibly intuitive, it's on the web, and it's very, very clear and easy to configure. But to really have an edge, you need specific, precise, unique TradingView indicators, like the kind we have at BK that give you buy and sell signals on the chart in an easy visual manner. Last but absolutely not least, you want to have the best possible execution tools. One of the things that we use at BK is Profit Shield Pro. That's a very, very simple MT4, MT5 applet that puts a stop and a target on every single trade you take automatically. That is absolutely crucial because unless the software does it for you, you're going to forget your stop, and that means absolute and total ruin if you're trading prop. Now, once you got your bundle of tools, you need to have a trading plan. And a trading plan really depends on how you're going to trade, what you're going to trade, and how much time you have to trade. Most people who trade prop like to day trade, but it doesn't matter whether you day trade or swing trade. The really big question you want to ask yourself is how many times am I going to trade per day or per week? The basic rule in trading is the more you trade, the smaller the size you must have. That's just basic mathematics and the function of markets. The more trades you're going to make, the more errors you're going to make. And if those trades are any larger than just the minimal amount of size, you will be ruined. Let me give you a good idea of what I mean. Let's say you're going to day trade and you're going to set yourself a target of 1% per day. A basic prop challenge asks you to make anywhere between 6 to 8 to 10% with a drawdown of about 5% to the downside. Our friends at Apex Trading require only a 6% up against a 5% drawdown. So it's actually really reasonable to achieve their evaluation target. But it doesn't matter whether you're doing a 5% target, a 10% target. If you're aiming for 1% per day and you're going to do at least 10 trades during that day to achieve that target, every single trade must have a tiny little target of 10 basis points. The more you trade, the more you want to slice that number of trades, the frequency of trades you make by the target that you're trying to reach. So if you're trading for 1% and you're going to make 20 trades, then you want each target to be only 5 basis points. Why? Because as I said, the more you trade, the more likely you're going to come into a tripped bad trade. Bad ticks, bad news, bad something. And if you're trading at size, you're going to run yourself into instant trouble. So the key is, if you're not going to be selective, if you're going to be active, cut down your size. That is trading plan number 1. Trading plan number 2, the key thing that you want to ask yourself is, what am I going to trade with? What's my risk-reward ratio? Now, everybody on the web teaches you to trade with a 2-to-1 risk-reward ratio. Risk $1 to make 2. And that sounds really, really good because all you need to do is be 50% accurate and you will make money hand over fist. But
oh, if only it were that easy, Marge.
All you have to do are the very famous last words every trader has ever uttered.
This time it's different.
Because in reality, the market doesn't give you $2 for every dollar you risk. It's not like there's money found on the ground. This is the most competitive arena in the world, and nobody is going to give you free money. So, unfortunately, if you're going to day trade, you're actually going to have to trade with either a negative risk-reward ratio or at very best, an even 1-to-1 risk-reward ratio, and hope that you have just a tiny 55-45% edge. Because this is a difficult game, and you just need a small edge to truly succeed. But do not delude yourself that you're going to have a 2-to-1 risk-reward ratio, make 10 trades a day, and be a billionaire by Friday. It's going to be the exact opposite. Now, the last thing, and the one that's actually the most important, is you need a good strategy. Because let's face it, without a good strategy, it doesn't matter whether you have a trading plan, it doesn't matter whether you have tools, it doesn't matter whether you're psychologically or physically fit. None of it matters because none of it is going to achieve the purpose of passing the prop evaluation test. So here's a strategy we use every single day in my BK chat room algorithm that really helps so many traders pass their evaluation test, including so many traders that have taken the Apex eval test. Let's take a look. Hey everybody, it's Boris Schlossberg, and I'm going to show you the only strategy that you're ever going to need to be able to pass the prop test. This is a strategy we trade every single day in our day trading room that trades the US stock indices like NASDAQ or US 30, but you can also use it on gold, oil, or even Forex. So let's get into it. This is a strategy that does the following thing. First and foremost, we look at the chart on an intraday basis and we subdivide the chart into the high, the low, and the middle. We kind of look at the playing field of the day like a football field or a soccer field. And rule number one is that we only want to be buying above the middle and we only want to be selling below the middle. So we always want to be on the side of strength wherever the price action takes us. But that's just the first step. The next step we want to have is we want the chart to be colored green. Our proprietary indicator will color the chart green whenever the RSI moves above 50, and we'll color it red whenever the RSI drops below 50. So the idea here is to be trading with momentum always on your side. We want the price to be in the upper half, want the momentum to be on our side, and then we want a green candle. We want a green breakout candle, but this is not just any kind of a normal green candle. This is a specifically colored candle that our indicator produces that creates much more powerful and much better, cleaner signals than just the regular green, red candles that we all see. As a matter of fact, you can see what we do here is we only have three types of candles: green, red, and black, which we ignore completely. So this particular thing is encoded to give us some very, very powerful clues. So we have a green candle, we have a green background, we want to trade in the upper end of the range, but even that is not enough to make us pull the trigger. The final piece of the puzzle is we need to have higher lows. So whenever you see the flag underneath the green triangle, that's the true buy signal. Only at that point are we going to be buyers of the trade. So in this particular case, you can see that we have a flag over here, creates a nice clean trade right before non-farm payrolls. But then after that, wait very, very patiently until we finally get a clean buy signal again. And this time we go for 30-30, which is our normal target stop range, even money. We trade with even money. All we're looking to do is be 51% accurate. And of course, we try to go for much more than that. We try to go for 50 to 60 to 70% accurate in our trades in order to be able to truly have a very, very profitable strategy. So let's play this through for the day and just see how many good trades or bad trades it was able to give us as we proceed. So here we go. The price action started. You can see over here, we possibly have a signal. However, it doesn't have a flag. Why doesn't it have a flag? Because this is actually a lower low. It's not truly a strong buy signal, and we ignore it. And it's a good thing that we truly ignore it because it gives us a little bit of upward price action and then dies on the vine. It actually stops us out. This little red line shows us we've been stopped out. So we avoid a totally unnecessary stop because this is a weak signal, and we're only looking for strong buy signals. So let's keep going as the day progresses, see if we get any more signals here. I'm keeping the price action a little bit slow just so you guys can follow me closely. Another signal, not a good one, not a higher low. So we ignore that. We stay patient. We keep going. The next signal, that's a true signal. We get a flag underneath it. It's a higher low. And you can see how after this signal, price just starts to verticalize. Everything puts together. Some momentum, price action, upward trajectory, all of it is put together to give us the optimal, highest probability chance of success. And boom, we're in here. 5 minutes later, we made another 30 points. So let's keep going and see how the day progresses as the day takes us along. We keep going here. We already have 2 trades to the good. Now comes the third trade. Is that trade going to work? Yes, it will. It's a third trade to the good. And we just keep going and going and going and going. And that's all you need. All you need is one simple, clean trend trading strategy, and you can achieve evaluation success with your prop account. That is how you just take one strategy, put it to good use, and become a powerful prop trader for your success. Hope you guys really enjoyed this. Boris Schlossberg. I'll see you in the markets. I'll see you in my chat room. Over and out.